FY17 has clearly been a year of big M&A deals. Some the street never fathomed would happen, like the Idea-Vodafone merger, HDFC Life's all-share deal with Max Life, consolidation, acquisition to tide over difficult economic scenarios have propelled deal flows last fiscal. Let's relive the excitement with Nisha Podar. She gets us the top 5 deals of FY17.
Top deal for the financial year has to be the mega merger of Idea Cellular and Vodafone India to create the largest telecom company in India, to topple Bharti Airtel from its top position and to counter RELGIO's intense competition.
If you look at the combined company, we're talking about leadership in 23 circles. We're talking about market share across the country of about 40%.
We have experience as Vodafone of mergers. As you know, we have done a number of mergers in the recent years, and we always systematically have hit the synergies either earlier or higher.
At number 2 position is the mother of all deals when it comes to the intent of reducing debt. SR Oil's sale to Rosneft and financial partners is worth a whopping $13 billion. One of the biggest FDIs in the country and a big relief for banks with huge debt exposure to SR Group.
Demonstrated our ability to build projects despite all the problems one faces in the Indian context, grow these businesses, create value, and then monetize.
Private equity firm KKR-led homegrown pharma company Gland Pharma is all set to sell 86% to China's Shanghai Fosun for close to $1.4 billion. A big deal indeed. And the much-awaited FIPB approval to a Chinese firm to invest in India has also finally arrived, giving a green signal to this large transaction. It occupies the number 3 slot on the top deals of FY17.
India today, has a bit of a deficit on private investments from local capital, and that's being made up by foreign capital.
Anil Agarwal, a regular on the deal chart every year, has done it once again. The mega merger of 2 of his group companies in India with Vedanta will create the largest diversified natural resources company in the country. FY18 may see Anil Agarwal go shopping, maybe in the steel sector.
We'll be balancing and seeing the market situation. The board will decide. Something can go to the debt reduction, something go for the expansion.
At number 5 is yet another deal which took the markets by surprise when HDFC Life aborted plans to go for an IPO and announced the merger of Max Life with itself to become the largest private insurer in the country. The deal is waiting for an approval from the insurance regulator IRDA. Deepak Parekh says consolidation in the financial services sector is here to stay.
How long can those promoters continue to pay those kinds of money and lose that kind of money? They all have foreign partners, but at some stage they will look at consolidation.
Many marquee deals like Nirma's buyout of Lafarge cement assets and Intas buying Teva's European units demonstrates India Inc.'s hunger to grow inorganically. Likewise, US-based Baxter making a big bang acquisition of Claris' injectables business revved up the cross-border deal market.
The 3 themes which stand out are: first, consolidation. We have seen that in several sectors, and much more to continue. Second, of course, is the debt-laden companies and the deals surrounding those. Some of them have really managed to happen in the last fiscal. And the third one, big business houses really looking at restructuring and mega mergers, which will change the dynamics of the entire group. And these 3 themes are expected to continue in the next financial year as well. So the next year promises to be even more active on the deal street.
Well, now let's dial into the telecom sector. This sector has seen a flurry of activity in 2017, from disruptor-driven tariff wars to a shake-up that has changed the country's telecom landscape to a blame game between the regulator and the ministry. The airwaves have been crackling. Take a look.
For India's telecom operators, FY17 did not begin on a strong note. The deceleration in data volumes, which reared its ugly head in FY16, continued to harry players, as did pressure in their voice business. Things became worse for telecom players in September 2016 when Reliance Jio grabbed them by the throat with its introductory offer.
Starting coming Monday, the 5th of September 2016, Jio's data, voice, video, and the full bouquet of Jio's application and content will be available for everyone, absolutely free.
This 3-month offer became a 6-month offer despite the telecom regulator being bombarded by objections and sent shockwaves through the sector. Pricing pressure, which had held relatively steady at 2 to 3% on a sequential basis, worsened sharply and pricing fell by double digits. Ratings agency ICRA estimates that the telecom industry's total debt, which stood at 4.10 lakh crore rupees in March 2016, would stand at over 4.5 lakh crore rupees by March 2017. All this sent incumbent operators into a huddle, and the outcome was consolidation, a theme FY17 will be remembered for as far as the telecom sector is concerned.
Serious consideration and thoughtfulness will have to be given to such mergers. There are overlaps, there are spectrum cap issues, but I'm still saying 4. Can it go down to 3? The answer is not impossible.
By this time, the market was already buzzing with talk of Airtel considering buying Norwegian giant Telenor's Indian assets, and while Mittal evaded the question in January 2017...
Sigve and I are good friends, we talk all the time. He is in difficulty, he has to find a way out in India.
He clinched that deal less than a month later, and Telenor hung up on a 9-year call to India. This left Airtel with more ammunition to battle Reliance Jio, especially in the form of spectrum in 7 circles. Of course, by this time, the market was also going berserk talking about a $23 billion merger of Idea and Vodafone, which materialized in March. So as FY17 draws to a close, a sector that once had 11 to 12 players is down to around 4, with Ticona, Systema, Videocon, Etisalat and Stel also calling it quits in India. And the players who remain are busy trying to reduce debt levels as quickly as possible. In these efforts, the sale of tower assets has taken pole position. Reliance Communication has sold its towers to Brookfield, Bharti has sold a minority stake in Bharti Infratel to KKR, and Vodafone and Idea have indicated that they intend to sell their tower holdings as well. As we enter FY18, not much may change for the sector. Reliance Jio has announced the end of its promotional offer by introducing tariffs that will kick in from the beginning of the new financial year. But even then, pricing pressure may not ease much because
we will not only match the highest selling tariff of each of the other leading Indian telecom operators, but in addition, we will provide 20% more data in each of these plans.
However, as consolidation in the telecom infrastructure and tower space gathers steam, balance sheets may see some relief. And this could be helped along by the fact that the government has no plans to go in for another round of spectrum auctions in FY18.
Exciting year that was, any which way you look at it. And with that, we wrap up this special coverage of FY17. Many thanks for watching.